a big day for silver, with the price topping $100 US an ounce for the first time. And that extends this scorching rally in precious metals, built in part on a surging demand for haven assets and frenzied buying globally. Let's get more from Michael Dehal, Senior Portfolio Manager at Dehal Investment Partners. What can we say about this gold rally that hasn't been said already?
Yeah, like you mentioned, it's been soaring since the beginning of the year. Gold's up almost 15% in the last 2 weeks. Silver's, I think, up over 40%. Obviously, what's happened in the last couple of weeks with geopolitical events, whether it's Venezuela, the Greenland issue earlier this week, has caught a bid for the commodities markets, in particular gold and silver, as those metals continue to be, a risk, off-risk safe haven for investors.
Silver in particular has gone ballistic. And this week we saw the price ratio of silver to gold dropping to only 50. And that's the highest relative price for silver in more than a decade. Could silver be in a bubble, do you think?
We think it is. Gold, it's more justified, the move in the gold prices over the last couple of weeks, right? Where silver is still kind of unclear why silver is surging so much relative to gold. And we do think that, these levels could, we are in some sort of bubble territory.
Would you be even tempted to put on a short silver trade and a long gold?
Well, we to be honest, we don't short. We are cautious with the move in silver, right? So I would definitely use caution. Like I mentioned, silver's up over 40% just the last 2 weeks, right? So there has to be some kind of consolidation coming anytime soon, right? And if geopolitical risks, simmer down, and remember, over the next week or two, we're going to see some the shift in the markets will be more towards earnings season, and obviously the central bank decisions for the Fed and the Bank of Canada.
Look at that silver chart. It's a parabola just going straight up.
Yeah, it's phenomenal. It's just these moves, right? Just a couple of years ago, silver was about $33, and now it's over $100. As a Canadian investor, it's great for Canadian markets to see, gold and silver shine respectively, right? Our TSX is up well over 4% just year to date, right? It's one of the best performing markets globally.
Would you recommend a minimum weighting or a small weighting in precious metals at all time?
Yeah, of course, yes. You have to be diversified, right? We are recommending to clients have a diversified portfolio coming into 2026, where we're going to see increased geopolitical events around the world, possibly reinflation flaring back up. So you want some exposure to commodities in your investment portfolio, and having that diversification among different sectors and asset classes is a key thing to write out 2026.
What would be a preferred way of holding precious metals for you? Would you buy an ETF just holding the metal? Would you buy gold mining stocks?
We prefer the gold mining stocks. We think the gold miners, especially the larger cap gold miners, do have great free cash flow and able to generate good free cash flow, especially the prices where the commodities, the underlying bullion is trading at.
I wonder, will we see investors bugging the gold companies? Give us a special dividend here, because what are the cash they're amassing at this point?
Yeah, exactly, right? So these gold companies, either they got to do share buybacks, special dividends, or look to reinvest into their operations. But I do think shareholders will be, commanding some kind of special dividends given the prices of these prices of the bullion.
What's your view on copper? Because it's at or near record highs too. Maybe we could put up a 10-year chart.
Yeah, copper, similar to the other two metals, has definitely been on a scorching tear as well. But copper is also used in different components, whether it's in EVs, manufacturing, phones, and things like that, right? So copper, it could also be a play on demand on manufacturing, right? So with the U.S. really looking to onshore manufacturing, that can catch a bid for copper prices.
I wonder, will we see Capstone Copper has been plagued by a strike in Chile, and I wonder, will the other miners see the unions getting more aggressive, because they can read that chart as well?
Absolutely, right. So that's always a risk for some of these mining companies, right? Their employees going on strike, kind of what we've seen.
Just with a highly cyclical, there's Capstone Copper. So despite the strike, stock doing just fine. when you look at a metal like copper, is it one that you would just hold for a decade or more, or a mining company that you like, or would you try to move in and out? Is it a stock for kind of visiting for a while, or a commodity for visiting and then leaving?
Yeah, like a copper stock, they're more cyclical plays, right? So it's more of a tactical play in your portfolio, right? So it's something that you buy for a short period of time, kind of ride out the wave for these companies to produce great free cash flow, and then get to exit out at the right time, right? So it's more of a tactical for copper versus a gold or a silver equity.
We are seeing more commodity ETFs come out. They're tricky because you've got to be rolling over futures and stuff. Is that an area that you've visited? Have they caught your attention?
We do have clients that are interested in the underlying commodity ETFs, right? So again, if it fits within that portfolio, within that asset allocation, we will definitely look at it.
Yeah, they're still not that big. Well, the precious metals ETFs are huge, but not the copper ETFs.
Not the copper, no, exactly not.
Yeah, it is interesting though. ETFs have made it a lot easier to invest in futures, for example.
Absolutely, yeah, and especially the U.S., right? You got GLD, which is a gold ETF, right? A lot of investors globally invest in that particular ETF, just get the exposure to the underlying price of gold.
When you hear from clients these days, or you sit down with them, what's their number one concern or worry?
Geopolitical risks, right, affecting the portfolio, in turn affecting volatility coming back to the markets, right? Kind of what we've seen last April with the trade tensions, right? We kind of seen that earlier this week with the Greenland issue, right? So that's what keeps clients up at nighttime or asking us questions: is our portfolio protected against these shocks to financial markets?
Michael, thank you very much indeed.
Thank you.
Michael Dehal is Senior Portfolio Manager at Dehal Investment Partners.